Well, he didn't say much.
Okay.
I mean, at the beginning, he kind of read a lot of his answers. I'm like, dude, you're still reading. Your statement's over. Quit reading already.
I thought that was weird. I listened to it on Bloomberg Radio, and I thought
it was awkward.
Why isn't this guy taking a stand one way or the other? Why even bother having the press conference if you're not going to say anything?
The dot plot, it's meaningless. We've got all these employment reports and CPI reports before we get to December 12th and 13th. So disregard that. I mean, it was. I'm like, dude, do you know you're talking out loud? You're like on TV.
TV, right?
Yeah. I mean, and I think what was disappointing was that so many of the reporters asked the same regurgitated question. We reworded over and over and about. I'm like, can somebody please take off the gag order and let somebody ask him about the balance sheet already?
All right, tell us about the balance sheet. What would you like to know about the balance sheet?
I mean, gosh, you've seen other deposits, liabilities. My mentor, Dr. Lacey Hunt, I follow them every single week. We're about to break underneath $15 trillion when the data hit tomorrow afternoon.
Wait, what did you say about Lacey Hunt from Hoisington, right?
Yeah, he's my mentor.
Oh,
so
cool.
he's taught me how to. I mean, every single week the Fed's data comes out and it shows you weekly liquidity on bank balance sheets, and you've gone from just about 17 trillion to next week. Tomorrow afternoon you're going to break 15 trillion. You've had $2 trillion of liquidity sucked out of the system because there's like a 1.5 multiple on every dollar of quantitative tightening. Shows up as $1.5 of liquidity being pulled out of the system, which is why your BCY Go function's on fire.
Okay, you've lost me and Paul already. I'm going to say
BCY Go. That's your
over.
bankruptcy function. Look,
bankruptcy.
It's companies rely on liquidity. And right now we're seeing banks continue to tighten lending standards. I mean, I'll be up and ready on Monday morning for the senior loan officer survey, but the Dallas Fed has a more frequent lending survey, and it's just getting tighter and tighter and tighter. Everything we heard from Capital One, Ally, they're seeing normalization in defaults, in credit card delinquencies, and auto defaults.
Wait, you said normalization, doing air quotes with your
normalization,
fingers.
air quotes. That means it's going above subprime.
Yeah.
So it's not contained to subprime. I love to quote Bernanke, but it's not contained to subprime, and that's what we're seeing. We've seen about a 12.5-fold increase of prime auto loans being downgraded into subprime territory based on where they're trading right now on bank balance sheets. We've never seen anything like this. And it's because when you put the rent on hold, the auto payment on hold, when you pay people $2,500 extra a month, when you put the mortgages on, everything went on hold. So we saw, and Moody's has done some good work on this, we saw insane levels of FICO score inflation during the pandemic. And now it's all coming back to bite because wages just aren't there, and layoffs are.
So
you've got continuing jobless claims up 6 weeks in a row, north of 1.8. Right. They're just on top of where they were in 2016.
So is your biggest concern that the consumer is not nearly as strong as maybe we think it is?
Well, I think the consumer's telling you they're not as strong. I mean, if you looked inside of the final University of Michigan consumer sentiment print at the medium tercile and top tercile of earners, they're like, job cuts are coming. And it's the lowest tercile that doesn't see it coming, but we're seeing it come out in the data week after week after week. I was talking to dailyjobcuts.com, the founder, and he's like, November is seasonally a quiet time. People don't fire people into Thanksgiving and the holidays. And he's like, it's out. They've come out of the gate. He's seen 25 companies close in 2 days.
This is the Austrian hangover, coming after all of that insane stimulus. It's still going on. Remember that Keynes versus Hayek rap video?
Well, look, I mean,
from the great financial crisis.
You've got some people are going to be paying their mortgage for the first time in December. That's how long FHA forbearance has been going since March of 2020.
All right, I got a listener question here, writing in. Did Danielle listen to the Druckenmiller interview with Paul Tudor Jones? Stan thinks rates are going higher because of an out-of-control debt profile of the U.S. Do you agree?
I don't.
No.
I don't. I mean, we've been spending like drunken sailors since Reagan was in office. It's just, I think Wall Street wants a narrative right now.
But Reagan boosted spending on the military.
He did.
We were talking yesterday to Paul's mentor, Cam Harvey from Duke, and he pointed out that next year we're going to have interest payment costs of $900 billion. Yep. We're going to pay more to service our debt than we do to fund the military.
Yep. Actually, we passed that up at the end of the fiscal year. It's about $685 billion for military, $808 billion fiscal year ended August 31 interest payment. So we've already rounded that. And the shame about the fiscal spending right now is it's not doing much. It's not creating anything. Like, there's no Hoover Dam, there's no Holland Tunnel. There's so that little that's being created.
They're working like crazy out there. The people out in Jersey, right, John Tucker? They were building like
oh yeah,
new
I mean
tunnel
the number of those gigantic
Jersey.
cranes by
Amazing.
the Gateway project.
So my question,
I stand corrected. Yay, we're building a tunnel.
Yeah,
It'll be ready in 20
only thing we
years.
care about in
I'm always on the bridges
infrastructure.
going to LaGuardia. Sorry.
Yeah, exactly. So is recession in your scenario? In your outlook?
I think recession starts the current quarter.
Okay.
This quarter, Q4
We have,
2023.
as of this morning's jobless claims data, the only state holdout right now that does not have rising, continuing jobless claims year over year is Kentucky. Well, I mean Florida, but that's a base effect from Hurricane Ian, so that's going to go away here. But that's it. I mean,
so you
September
have a
2022, there were 0 states with rising, continuing jobless claims. Now we got 50.
Okay, so you have a recession in your outlook. How deep? How long?
I think it's going to last longer than we think because
Okay.
we've pulled so much demand forward. We're seeing one furniture company after another go out of business that had been in business for 100 years because we pulled so much demand
Yep.
forward with all that stimulus money.
All right.
That's the hangover, dude.
It is a hangover,
Yes.
but it's not as funny as the movie.
So,
No.
so should the
was a good
Fed?
movie.
What should the Fed do here?
I think the Fed's on hold. I really do. But again, it's about the balance sheet. Nobody's talking about Voldemort. I'm saying it out loud. It's about the balance sheet, people. It's real.